Hello and welcome. You're watching Your Trades on ET Now. This is Priyanka Uppal along with me, Snehi Shah. Nifty clearly gave us a jitter today because, of course, it is at off day's low, but then we opened up with a gap down and later on we saw that major supports, which was 21,900, 850, they all were broken and then we've just managed to close above one of the crucial support, that is 21,800. Bank Nifty looks like a major support at 46,000. That is still intact, but let's see how market behaves in coming days to come. Sectoral wise, all the sectors were in red except for real estate sector. Major drag was IT index was down by 3%. FIs have been said a long short ratio hasn't moved much. 37 to 63% is a long short ratio also. Macro factors also playing a big role since we saw the crude inching back to 87 levels. Russia refinery attacks the reason, and surprisingly today, Snehi, in fact the defensive space, which majorly on such days plays a crucial role, they were also being sold out. So defensive, like you talk about pharma, you talk about large cap defensive names like Dr. Reddy's, Cipla, Britannia, they were also being sold out clearly. So market, there seems to be a serious concern at this point now whether the sell-off started from small and mid cap and has expanded to large caps clearly and defensive names also now.
Absolutely. So, well, not a very good day for us coming out in today's trading session. And let's also take a look at the other headlines that made news today. And it's an ET Now exclusive. Vodafone PLC is likely to sell stake in Indus Towers. So, it's an ET Now exclusive. We'll be bringing you more details shortly on this. The other newsmaker today was Unilever, because that company has said that it plans to spin off the $8 billion ice cream business. And they're saying that the ice cream business will be a separate entity. This is being done to cut costs as well, and they are going to also be firing 7,500 people to cut costs on that front as well. And lastly, we also had a couple of stocks that were deep in the red on the back of the brokerage note impact that we did see coming. You have the likes of Exide Industries and Piramal Pharma. There was a Jefferies note on Piramal. They say that the debate over the FY25 guidance, given the macro uncertainty around outsourcing, is not very bright coming out. On the other hand, Axis Capital on Exide Industries downgraded the stock further to a sell rating from a reduced rating. They have a cautious view and they see lack of in-house R&D and capabilities and complete dependence on the technology partner when it comes to the development of the lithium-ion batteries as well. So, not a very good day for us in trade today, rather tempered. But to understand more about today's moves and what we can expect going forward tomorrow as well as for the rest of the week, we're being joined by Kunal Bothra, a technical expert. Kunal, hi, thanks for taking the time out and joining us. Help us understand the kind of moves that we are seeing. Is this the new normal for us, at least until the elections come up? Is this something that we should start getting used to? Because we're seeing a few sessions of downfalls, then we have this one session where the markets look good, then again a series of downfalls, and then you again have that one session that looks good. So help us understand this pattern and why is this happening?
Yeah, I think well put. So I would believe that this could be a near-term trend for the indices as well as for rest of the market, because we're seeing this broader risk off which is happening for our market specifically. So after last week of very sharp correction across the mid caps and small cap indices, where you saw single day correction of 4-5% odd for the indices, post that what we've seen is still a drag or a drift on the downside for many of the mid caps and small cap names. That clearly is an indication that the pain is not yet out, and this is selling which happens when there is a risk off which happens across the portfolios. So I would believe that that's a process for at least 2 to 3 weeks or more for many of the institutions, and that I believe could probably drag the indices further. We are now very close towards a breakdown point for the Nifty as well, 21,800, a very crucial support, so 21,750 to be precise. This was the same point last, in the previous trend for the indices, where we took a pause or a resistance, and the moment we managed to break past about those levels, we climbed up at least another 700 to 900 points on the Nifty. So on the way down also, 21,750 should act as a major support for the indices.
Okay, now, all right. So we're talking about major supports, Kunal. Looks like, can we say that this is a sell-on-rise market now, and what would be the stocks that you would eye on?
Yeah, it's more of a sell-on-rise markets, definitely, Priyanka. So in that regards, I would still bet on the larger cap names. So 2 buy calls across the large cap stocks which are looking quite strong. First one is Aban Maruti. That's a stock which is still perched very close towards its previous highs breakout. So 11,600 is where the stock is trading approximately. 12,000 is the target, and stop loss could be kept at 11,350. Would suggest a buy. And the second would be Aban Kotak Bank, relatively strong at least over the last 1 to 2 weeks for the stock price as compared to many of the other private sector banking names. So would suggest a buy with 1800 as a target, expecting this flag pattern to break out for Kotak Bank. Stop loss for this trade 1725.
At least Kunal could find 2 large cap names that to be on the buy side.
Absolutely. So, well, some wonder left in the market, at least something that's something that we can hope for. But with that, let's also shift focus from the fundamentals. Let's start looking at the technicals. And Shrishti is joining us in the studio to talk about how the technical charts are looking at. And Shrishti, what stocks are you spotting today?
So 2 counters, one on the breakout side and the other one on the breakdown side. Firstly, let's start with the breakdown stock. Like Priyanka was mentioning that even the defensives were under pressure today, and Cipla was one such stock which was down about more than 3.5% in today's trading session. And we did spot a breakdown there. Why so? Because the stock was in the uptrend clearly. It managed to face some rejection around 1500 odd level, and in today's trading session slipped and broke below its 20-day moving average, and this move was indeed supported by a short build-up on the derivative side. So this is the first counter which is now coming under pressure, managed to break down, and this consolidation that you were seeing around that 1450 and 1500 levels is something that has taken a shift on the lower side. Moving on to the next one, and that's on the breakout stock, and this one is Bajaj Finance. A stock which was clearly under pressure for a long time now. But what was interesting to see that every time the stock was facing a rejection exactly from its 20-day moving average, and in today's trading session from the time the stock started, it was just building onto the gains. So strong candle on Bajaj Finance was holding strong, moved above its 20-day moving average, but today's move was a short covering one. So we will watch out for that. But for today, indeed a breakout that we had spotted. Back to you.
Smart move, Srishti. One on the sell side and one on the buy side, and of course market seems to look like finding some comfort in banks and finance, at least the large cap ones, and hence the recommendations coming from Kunal and Srishti also could spot one for us. Thanks very much. Let's move ahead and let's understand what are the wise people advising on the streets at this point in time. Nilesh Shah, MD and CEO of Envision Capital, expects large caps to relatively outperform over short term. He also adds that small and medium companies can grow at higher rate over medium term. Let's listen to him.
If you are essentially looking for maybe the next 2 or 3 months, it's quite possible that large caps will probably relatively outperform. They may not fall as much. They might actually rally a bit. But I don't think beyond that. I still believe that a lot of the mid to small sized companies, a lot of bottom up opportunities, they will continue to outperform over the next 1 or 2 years, or maybe even 3 years. Clearly, as long as, of course, you're buying good quality, you're buying companies which meet governance standards and meet some of the liquidity norms as well. I think if all of that is in place, I still think some of the smaller to mid-sized companies have the ability to grow at a much faster pace or higher pace. A lot of these companies have their balance sheets which are pretty much intact and well positioned for growth for the medium term.
That's the word coming in from Nilesh Shah. But with that, viewers, we'll slip into a short break on this edition of Your Trades. We'll be right back with more on today's market action. You stay tuned.
Welcome back. You're watching Your Trades, and since we said that the defensives were also being sold out, and surprisingly our interesting research which FMCG index, on FMCG index, what our team has gotten for you is that FMCG index continues to lag. It is the worst performer today, on the decline for the second straight session. Concerns about a slow rural recovery and likely rise in input costs are some of the factors. But what else is ailing the sentiment? Vinny tells us more.
So absolutely, today what is actually coming in is that FMCG index has fallen for the second consecutive day, more than 2% fall that we saw at the end of the day for the FMCG index. And obviously, when you're looking at it, the biggest intraday fall that came in today for the FMCG index since the 8th of Feb. So why was there pressure? One, obviously, everyone was talking about that rural recovery. Seems like that's not happening at the pace that one was expecting at. And for FMCG companies, around 35 to 45 to 50% of their revenues actually come in from the rural space. So yes, rural recovery still continues to be a concern. We have not seen that coming in even in Q4. Now, fears around rising input costs. When you talk about palm oil prices, crude prices, Brent crude oil prices, all of them have seen an increase in the last 1 month as well as last 1 week as well. A sharp increase that has come in these prices, and that could be something that could come in as a pressure for them, and in turn a pressure that could come in terms of the margins of the company as well. So yes, pressure could be seen maybe on the possibility of the margins of the company. If we see these raw material prices still continue to rise, then it would be a concern coming in, like you can see Brent crude oil prices as well as the palm oil prices. Other than that, raw material deflation that we were talking about, now that's moved back, and maybe that will only start happening from the second half of FY25, and that is why that could be a concern coming in terms of the margins of the company. Channel checks are suggesting that yes, mass products still have not seen a recovery. There's no improvement in terms of the demand for mass products as well, while premium products continues to do well. So that K-shaped recovery is something that would continue for these FMCG companies. And yes, if Q4 print is quite weak in terms of the result, then maybe one could see downgrades coming in, as what analysts are highlighting, as well as channel checks are suggesting that we are not seeing any uptick in terms of consumption even due to the festive season. Whether you look at a Holi or a Eid, that's not seen anything in terms of an uptick for the consumption pack. So when you're looking at it today, HUL ended at a 52-week low, sharp fall seen in ITC, Nestle as well as Britannia as well, which saw a sharper fall coming in. And in terms of valuation also, when you look at it in terms of the FMCG index as well, the Nifty FMCG index in the past has seen a reversal only coming in once they have fallen to those levels of around 25 to 30 times in terms of the PE for the FMCG index. So yes, that's what we're keeping an eye out on in terms of valuations also. Where it stands at is that the peak PE was at 42 times in the last 1 year, currently at 38 times, and the low was at 34 times. So let's keep an eye out on how this pans out for the FMCG index. As of now, we saw a crash coming in, no recovery in the rural area is what we are seeing.
Thanks so much for taking us through that. FMCG index is the one that we'll be closely watching out for over the next course of days. But let's move on to an ET Now exclusive, and we learn from reliable sources that Vodafone PLC will soon sell stake in Indus Towers. My colleague Cheryl D'Souza is joining in with more exclusive details on this. Cheryl, take it away.
Yes, let's put the spotlight on Indus Towers. It's an ET Now exclusive. Sources have told ET Now that Indus Towers, we are likely to see a block deal in Indus Towers pretty soon. What we are picking up from our sources is that Vodafone PLC is likely to sell stake in Indus Towers via block deal. Remember, the Vodafone PLC holds a stake in Indus Towers via Mobile West, and Mobile West for now holds about 8.59 crore shares, which actually translates to about 3.2% stake in Indus Towers, and the block deal could be likely in the range of around 210 to 220 rupees per share. But also what would be very key to actually point out or to note is the fact that the Mobile West stake that they're holding in Indus Towers is actually pledged. We did write to Vodafone PLC to get their views on this particular deal. They're yet to respond to ET Now queries. And remember that post this particular stake sale, the Vodafone PLC will own about 17.85% stake in Indus Towers. So what we're picking up for now is that Vodafone PLC is likely to offload some of its stake in Indus Towers, the stake that it holds via Mobile West. And Mobile West, like I mentioned, holds approximately 3.2% stake in Indus Towers. Remember, in early Feb also we saw a couple of entities offloading their stake in Indus Towers. One of them being a KKR entity also, which actually offloaded about 4.8% stake in Indus Towers, while even you had CPPIB also that actually sold about 2.14% stake in Indus Towers. So very soon we are likely to see another block deal in Indus Towers. This time around, Vodafone PLC stake held via Mobile West will be offloaded.
Very much, Cheryl, for the news, for the exclusive news on it. Of course, Vodafone name did came earlier, also early in February, when along with the other PE investor who offloaded, rightly you just mentioned, KKR and Canada Pension Fund. Thanks very much for this news. But then let's take you away. Let's take you to further to the other stories which buzzing today. The other stocks and news. The list has been compiled by Gaurav. Let's listen to him. Gaurav.
Well, yes. First, let's talk about JBM Autos, because the company has now won an order to operate 1,390 electric buses for next 12 to 18 months, and the value of this order is going to be somewhere around 7,500 crore rupees. And on back of this, we saw the stock was trading in green today. Let's also talk about REC, because now the company has announced third interim dividend for 4.5 rupees, and this is going to get paid before 17 April. And on back of this news, we saw the stock was trading in red, but it showed some kind of recovery from its day low. Let's also talk about Bharti Airtel, because the company is now expanding its network in Surat district to support its rural expansion project, and the district where they are expanding their network has total population of 2.5 lakh people. And on back of this, we saw this stock was also trading in green today, and it was near 52 weeks high levels. Apart from that, let's also look at some of the stocks which are buzzing on the back of the brokerage note. So we have Piramal Pharma, where Jefferies maintained buy rating and a target price of 170 rupees, because they believe that we may see 12.5% revenue growth over the next 2 years in the company. And on back of this, if we also look at the valuations, they seem at a very attractive levels at this level, and that is why if we also look at the stock performance also, it was up almost 3.5% in today's trade. And lastly, let's also look at Exide Industries, because Exide Capital has now downgraded the stock to sell rating with a target price of 240 rupees per share. They believe that the lithium ion, the company's efforts in the lithium ion batteries are going to be a little on a cautious side, and if you also look at the valuations, they see some kind of risk in the valuation derating, and that is why we saw the stock was trading down almost 3% in today's trade. So tomorrow also we will keep an eye on all these stocks and see how they perform.
All right, well, Gaurav, thanks so much for taking us through that. But with that, viewers, I'm afraid we're completely timed out on this edition of Your Trades. From Priyanka, me, and the team that put this show together, thanks so much for watching.
If you like this video, then like, share and subscribe to ET Now.